Great, hear my voice. Drop a 333. 333. Cat, please keep your mic on mute. Cat, who just logged in. Cat, please keep your mic on mute. And we will go ahead and get started, guys. So beginner Zoom, guys, for those of you all who are new to Trade Bankers Group, if you've never been to a beginner Zoom, can you just drop a 111 in the chat? I want to just gauge the room. Just drop a 111 if you've never been to a beginner Zoom. Okay, so everyone's been, okay. So we just got William, okay. Ashley. Okay, so we really only got 2 people. Okay, cool. Okay. All right. So 2 people. Okay. Trying to make sure everybody is in. All right. Let's do it. Okay, so for beginner Zoom, guys, is the Zoom where I show people the strategy that we use, the trifecta strategy. So let's talk about that. So I like to start all the way from the beginning. And what I mean for the beginning is when you actually, from the point where you actually go into tradingview.com. Hey, I got some people trying to hop in. All right. So if you are a beginner trader, if you have set up and created your TradingView account, so tradingview.com, if you set up an account with TradingView, just put TW in the chat. If you have a TradingView account, just put TW, TradingView. Okay. Cool. Okay, so once you get to tradingview.com, the way that you know if you're logged into your account, you'll see your username. And my username is right here, rwood74. There's no need to upgrade your account. All you need is the basic TradingView account. Okay, you do not need to upgrade or do pro or anything like that. You do not need that. It's not necessary. So everyone understands that you can keep the regular TradingView. Just put REG for reg, for like regular TradingView. Okay, don't need to buy the extra stuff. It's not necessary. Okay. Now, once we get here, we're going to go to chart, and you're going to click. Once you click on chart, it is going to take you to a screen. Your screen may not look like this because my screen has been customized, but it's going to bring you to a trading screen. Okay. Once you get to this trading screen, guys, what you want to do is first, all of this on the right-hand side right here, all of this news, you want to move all of that, guys, out of the way. Move all that out of the way. Once you've moved this out of the way, guys, the next thing you want to do is go to right here. This little menu right here, we see XAUUSD. This is where we put in our symbol pairs. Okay. Symbol pairs meaning any currency pair that you want to look at. So particularly when it comes to this strategy, I like to teach you guys how to trade from gold first. It's kind of the easiest to learn how to trade. Just looking at the movement of the currency pair. It's easy for most people to learn how to trade from gold. Is this the MetaTrader? No, Tatiana, this is TradingView. This is not MetaTrader 4. This is TradingView. MetaTrader 4 is on your phone. TradingView, what I'm doing now, is what you should be looking at on your computer. Okay, so we're looking at TradingView. So once we type in XAUUSD, guys, it's called a symbol pair. Anytime you're looking at the foreign exchange market, you're going to see symbol pairs. Okay, the first 3 letters will represent the first currency or commodity. The last 3 letters represents the other currency or the other commodity. Okay. So when we're looking at XAU USD, we're looking at gold versus the US dollar, or the price of 1 ounce of gold per US dollar. Okay. So once you type in XAU USD, you're going to see multiple exchanges. Okay. I think I got some older traders on here who've been on here for a while, intermediate traders. So for my intermediate traders, when we are looking at the exchange, which exchange do we use, guys? Can anybody help the beginners out tonight? We use Wanda, correct? And it's the most accurate and most current, correct? Okay. So we're always looking at Wanda, guys. We choose Wanda, it's top one, because it's going to give us the price on gold at that very second. We don't want to know the price of gold 5 minutes ago or 2 minutes ago or 30 seconds ago. We want to know the price of gold right now. So in order to get the most current up-to-date price on gold, we have to pick Wanda. So all my beginners, if you understand that we pick Wanda as our exchange, just put O in the chat for me. Okay. So we pick Wanda. Now, once we've picked Wanda, okay, guys, once we pick Wanda, don't need any of that. Delete this. Once we pick Wanda, the next thing we want to do is we're going to choose a time frame. Let me turn these off. Oh, shit. Didn't mean to do that. Turn these off. It's not for you guys yet. I got somebody trying to get in. Okay. So once we've picked Wanda, we have to figure out what time frame we want to look at the price of gold moving through the market. So these red and green lines are called candles. Okay. And the candle has how many parts, guys? Who can tell me how many parts? How many parts does a candle have? 4 parts. Okay, 4 parts. So we have the open, the high, the low, and the close. Okay, so every candle is going to have an open, high, and a low, and a close. Okay. Now, what we want to look at, we want to know which time frame did we look at of the price of gold moving through the market. I think Jashar said it already. We look at it, and Trivia said it. We look at the hour chart. Okay, go to the hour chart. This is something from our previous class. Let me delete all of this. Delete all that. Now, once we've chosen an hour chart, and guys, can you tell them why we choose the hour chart and not choose any of these other time frames? What is it about the hour chart? Why? Clearer view, better view of the trends. You can see everything. Exactly. So everyone is absolutely correct. We look at it at a higher time frame from a higher perspective. You want to look at price moving through the market hour by hour versus minute by minute, because we see more of market movement. Okay. See more of market movement. So that's the reason why we look at time from a higher time frame. So if my beginners understand that we look at the hour chart when we're charting, because we want to look at price from a higher time frame, just put H in the chat for higher time frame. H. Okay. We'll look at it from a higher perspective. Okay. Now, once we do that, we want to locate current price. Okay. So now we're looking at the hour chart. We know that each one of these red and green candles represents the price of gold every hour moving through the market, hour by hour. So we want to locate current price. How do we locate current price and find out which one is the most current candle, guys? How do we know? It's furthest to the right, absolutely correct. It's furthest to the right, and it's going to be the one that has what else coming from it, guys? It's furthest to the right, and it's going to have a line coming from it, and that line is either going to be red or gray. Okay. Green that the price is going up, red that the price is going down. Okay. Now, once we've located current price, which is right here, the candle further to the right, candle with the line coming from it, we want to zoom out as far as we possibly can from price on our screen. while keeping current price in our what, guys? What do we want to keep price in? We want to keep price in what? We want to keep price in our trading window. Okay. We want to keep price in our trading window. Okay. So this is current price right here. You can see it. It's in our trading window. Right? This is out of the window. We can no longer see it. You have to be able to see price in order to predict price. So this is price in our trading window. This is price out the window. Even though we can still see the green line, that's not good enough. We need to be able to see the candle, guys. So if you understand that price needs to be in our trading window, put TW for trading window. Okay. It's very important.
You know what I mean? Like, Ben just is allowed to hit on any girl he wants, whenever he wants. You know what I mean? Private or public.
Okay. Now, once we've zoomed out as far as we can, and understand, when you zoom out, guys, everyone's zoom out is going to be different, depending on what type of computer you have. All that matters is that you zoom out as far as you can on your computer, and the strategy will still work. Okay? Just zoom out as far as you can on your computer. Okay, guys? Now, once we zoomed out as far as you can, we want to know from what day to now we're looking at the price of gold moving through the market hour by hour. The way we do that is like this. We know the current price is right now today, right? And we have 52 minutes left in this hour, right? 52 minutes and 21 seconds left in this current candle. That's from right now today. And we're looking at all the way back here from March 10th. So from March 10th, we're looking at the price of gold moving up and down through the market hour by hour from March 10th all the way until today. Okay, so that's roughly March, April, May, June, July, August, about 5 months worth of information. So if everyone understands that we're looking at the price of gold moving through the market from March to now, which is 5 months worth of movement, just put 5 in the chat. Okay, cool. Now, once we know we're looking at 5 months worth of information, we want to locate two things. What two things, guys, do we want to locate now in our trading window? Right, in the immediate traders. What do we want to find out? You're going to find out two things: the high and the low, or the support and the resistance, or the ceiling and the floor. Okay, however you want to term it. Support and resistance, high and low, floor and ceiling. So when we say we're looking for the resistance, we're looking for the highest point that the price of gold has gone between March and right now today. We want to know the highest point. So when we look at the price of gold moving in through the market from here, from here to here, the highest point, it's safe to say, is right here, guys. Correct? 2076. Is it safe to say that if you guys see that 2076 is the highest point that the price of gold has gone between March and today, that this is the highest point? Just put H in the chat for high. Okay. Now, once we've located our highest point, our resistance, we have to locate our support or our lowest point. Our lowest point, guys, is back here. Back here. This occurred on what day? This occurred on March 16th. The price of gold dropped down to, and move this chat out the way. Price of gold dropped down to $14.46 an ounce. So we're gonna put a line right there, right here. If you see that $14.46 on March 16th was the lowest point that the price of gold has gone between March 10th and today, just put L for low. Okay. So you zoom out as far as you can on your computer, Kathy. As far as you can on your computer. So everyone's computer is going to be different. You may be able to zoom out further than me. You may not be able to zoom as far as me. But you just want to zoom out as far as you can on your computer. Okay. Now, once we've done this, we located our floor, our lowest point in the market. We located our resistance, our highest point in the market. We want to use what tools to figure. So we have price caption and what, guys? What do we have price caption in? We have our floor and we have our ceiling. We have price caption in the what? We have our price caption in the building. It's caption in the building. Okay. It doesn't matter, Nora. So guys, listen to me. You want to zoom out as far as you can on your computer. Your floor may be lower or higher than mine. Okay. It doesn't matter. It's never, no one's computer is going to be exactly like mine because we all working on different computers. So no one's chart is going to be exactly spot on to mine. Okay. So all you have to do, guys, is zoom out as far as you can on your computer and get your high and your low on your computer. Does not matter. Okay. The biggest thing is that you zoom out as far as you can and you mark your floor and you mark your ceiling. Oops. Let's go back here. You mark your floor and you mark your ceiling. Okay. Now, as everybody said, we have price in the building, but we don't know how many floors are in our building. And the way we go about finding the floors in our building is by using what tool, guys? What tool do we use? We use the fib. Exactly. So we come over here, guys, to this toolbox. Come by this little pitchfork, and click the little button to the side of it, and it's going to open up this drop-down menu. We go to fib retracement right here. Click on fib. Now, what we do with the fib is we take the fib and we put it on the bottom white line. We click. And as we have it on this bottom white line, we're going to drag it diagonally to the top white line. Not dragging it vertical, not dragging it backwards, but dragging it forward diagonally to the top white line. And you can bring it anywhere on this top white line. You can bring it here. 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 Long as it's being pulled diagonally, this goal line is diagonal, and you're dragging it to the top white line. I'd like to bring it about right here. And you click. When you click, it locks it in place. It locks it onto your chart. Now, when you lock the fib on, what the fib gives you are these different little white lines. These white lines represent what in the market, guys? What does it represent? What do those white lines represent to us? Anybody tell me? Our floors. Exactly. Our floors. These white lines, guys, represents our floors in our building. Okay. So as you see 1929.25, that's just a price point in the market. Okay. Price point in the market. So these different floors just shows us exactly where our floors begin in our market. In our building. So right here, I'm going to put a white line that represents the first floor. Right here represents the first floor. And everyone sees first floor. This white line is the first floor. Just put 1 in the chat for me. Okay. We put our next line right here. Boom. This represents the second floor. You see the second floor, drop a 2 for me. We go to third floor. Okay. You see the second and third floor, just put 2 and 3 for me. Fourth floor. Fifth floor. Sixth floor. Sixth floor. And our last one is the 7th floor. It's already done. All right, so if everybody see that we got 7 floors in our building, just put 7 for me. Okay. If you see and if you understand how we got our 7 floors, just put 7 in the chat. Okay. Now, once you've got our floors in place, we no longer need the fib. So we can just delete the fib by either going to the bottom of the goal line here, either go here to this black dot or up here to this black dot. And you just right click on it and hit remove. Boom. And it takes that fib off. Okay. Now for my beginning traders, what I want you all to do is I want you to just look at this chart, and in relation to the chart, right, I want you to look at the red and green lines and the white lines. What do you guys notice about the red and green lines in relation to the white lines? What's happening? Can anybody tell me what they see occurring? Intermediate traders, let the beginner traders try to figure it out. I know you guys already know. Yep, too late. Always trying to get to a white line. Yep. Price is always trying to get to a white line. Okay. What do we mean by that? Let's just look here. Let's look down here. So I'm gonna put a line right in the middle right there, and I'm gonna just turn it yellow. Right? Look at this yellow line. As Trivia just pointed out, guys, price, let's just say when price is right here at this price point, right? This yellow line represents the price of 1720. 1720. Okay. This yellow line represents the price of 1720 and 88 cents. Can you guys see that at that price point, price is either trying to get to the white line below it, right? It's trying to get to the white line below it, or it's trying to get to the white line above it. If you guys see that price, no matter where it is either trying to get to a white line above it or below it. Just put AB for above and below. Okay. Price is always trying to get to the white line above it or the white line below it. That is the name of this game. Okay. Price can only move one of three ways. It's either going to move sideways, it's either going to break up, move up, or it's going to break out, moving down. Okay. We only place our bets, guys, when prices are doing what? Moving in which directions? When do we place our bet? When prices are moving in what direction? Can anybody tell me in the chat? Up or down? Exactly. We only place our bets when prices are moving up or prices are moving down. We never place our bets when prices are moving sideways. We don't want to trade in that area. Okay. So I'm going to erase this yellow line. And what we're going to do is zoom out, and we're going to locate current price. Current price is right now on floor number. What floor is current price on right now, guys? Can anybody tell me what floor current price is on right now? On the 6th floor, right? Price is on the 6th floor. And what we know is that price is going to do what, guys? Either trying to get to this white line above it or the white line what, guys? Oops. Below it. Trying to get to the white line below it. Okay. Price is going to go one of two ways. It's either going to go up to the white line above it, or it's either going to go down to the white line below it. Okay. So we don't want to chase price because right now, price is in the middle. That's considered what? What do we call when prices are in the middle? When price is in the middle, what do we call that, guys? We have a term for it. Call it consolidation. Exactly, Ashley. We call it consolidation. We don't place bets there. We don't place bets there. We wait for price to try to come towards this white line, and we wait for price to try to come down towards this white line. So we don't chase the trade, we what the trade, guys. We don't chase it, we do what? Don't chase it, catch it. Catch it. Okay. So the way we catch the trade is by positioning ourselves to catch it, moving up or moving down. So let's move these blue lines out the way. Because we know price is either moving up or moving down. And the way we catch it is we know that price trying to come to the white line above or below. So we're going to put like a little buffer between the white lines and price. We're going to make price come through our buffer zone, through our supply and demand zone to touch the white line. Okay, so what do I mean by that? So we want to look at price above first, 1929. We want to drop down 30 pips from 1929. We're going to put our first horizontal line. So if we are dropping down 30 pips from 1929, what will our first line be from our non-beginners? 1926, absolutely. Let's move this out the way. So they drop down to 1926. Let's see. 19, zoom in. 26. Right about there. Okay. We're going to put our first green line. And then we're going to drop down another 30 pips from 1926 to 1923. Zoom in a little closer. 1923. Boop. That is our first supply and demand zone. Okay. It's our first supply and demand zone. Then whatever we do above, we have to do where, guys? We have to do it below. Okay. So 1835, we want to move 30 pips, so $3 up from 1835 is 1838. Try to get as close as I can. Get right there. Let's just go right here. 1838. We're gonna make that color red. I'm gonna move it up a little bit. 1838, 889. It's close enough right then. Up 17. No. Right about that. That's cool. 838. Okay, next one, 841. 841. Right there. That was our second supply and demand zone. So we know the price is either going to come through here or here. Right? We know price. Given where it's at right now, it's either going to try to come to this white line or this white line. What we've done is position ourselves with these zones to make price come through it in order to get to the white line. Okay? These are called our pending orders. Okay, our green area is called what, guys? What do we call the green area in this situation? What type of pending order would our green area be? A buy stop, correct. Buy stop. Okay. And our red area will be what, guys? Our red area will be what? A sell stop. Good job. Okay. So now we want to do what's called back testing. We want to look back at price. When price is along this green line, how did it react? Right? So our first reaction that we can see, guys, occur right here. Okay, our first reaction occurred right here. Can everyone see when price went through the zone right here? If you can see our first positive confirmation when we're doing our back testing, meaning we are looking back at the market where it's currently at, right here. We are moving back, looking at price in relation to projecting it going up. And we can see that it moving up, we have one positive confirmation. If you can see that, just put one in the chat. Okay. Price went up through the zone from this particular point, shot up. It came back down, didn't come all the way back down to where it's at, but came down close enough and then went back through again. You can see that confirmation number 2 right here. Came down, went back up. If you can see that, just put 2 in the chat, guys. We have 2 positive confirmations. Price. We have a prediction of we see 2 times where price dipped from here, shot up through the zone, came back down, shot back through. 2 occasions. When it comes to price moving down through the red zone, we don't have any thus far, right? We don't have any thus far. So we've seen in the past price shoot up from this point and go back up, but we haven't seen it so far coming back down.
What's
that make it won't make a difference, Sonora. As long as you use the field, it does not matter.
I know. I got peppers and what?
It does not matter, sis. As long as you use the fibs, it'll still be okay. You just want to always do your back testing to see if you have confirmations. That's what's important. You want to go back and back test to see in the zone that you created, do you have confirmations? Okay. Because the way you know that this is a good area to set your buy stop or your sell stop is because of the confirmations that you have. So we know this is a good place to set a buy stop because we have two instances, two confirmations. We don't have anything down here in regards to price moving down because price has been rising for the past couple of days. Okay, it's been rising. So this is the first time we've seen prices coming back down to the sixth floor in a long time. Prices haven't been down here since July 21st, and they were moving up through the sixth floor, right? Prices haven't been this high in a while. So as we're making our sell stop, our pending order for our sell stop, we don't have any confirmation to look back on, right? We don't have any confirmation to look back on. So with this one, with our sell stop, we just have to look at the overall momentum of the market, okay? We're looking at the overall momentum of the market for this sell stop. And what I mean by overall momentum, we know that what goes up must come what, guys? This is simple physics. Whatever goes up must come what? Must come down, right? Gotta come down. So when we just zoom out real quick, and let's just look at gold moving through the market day by day. Gold has been moving up in the market day by day since March 19th. It's just now starting to come down, and it's stuck on the sixth floor. So if it's been trending up, that means the price of gold. If the price of gold has been going up, that means the value of the U.S. dollar has been going down. Now we have an instance of gold dropping in price. That means the U.S. dollar is getting strong. The market is retracing now. Okay. So at this point where we're at, we look at on a higher perspective, looking at the daily chart, it can quite possibly have hit a level of support right here because we have this tail on the candle. We have that. It means it hit a low peak and it started to push back up. It means it hit a level of support right here. So now what we want to do is see if it's going to break this level of support down here and continue to go down towards our sell stop, or is it going to, if it's going to respect this level of support and start heading back up again towards our buy area. Okay. If everyone understands that, just got it in the chat for me. We want to see now if it's going to respect it and push up or start pushing back down and break through this floor. So it's at a very, very pivotal point in the market. But when we look back here, guys, right, when we look at today, the lowest point that it went today is right here. When we look back in time, this is the same area as this. Can you guys see that? How respect the price right here? How it peaked and respected at this area? Can you guys see that respect right there? Along this 1872 area? Along this line? Can you guys see it, yay or nay? You just put a little line right here. Just point it out. Oh, make it yellow. Price respected this area right here. Right? You see it respecting it now. But also, you move it down a little bit. Right here. You see the respect here. Right? So this right here, guys, just like we had last week. I showed you this box. We want to see what price is going to do. Is it going to break up out of the box, or is it going to break down through the box? And once we see which direction that is breaking out from, we know if it's going to hit our buy stop or if it's going to hit our sell stop area. If that makes sense, just put an MS in the chat for makes sense. Okay. So let's go back to our hour chart. And we see right now in the hour chart, we land right on top of that area. It's still not a clear breakout to the upside. It is still not a clear breakdown to the downside. We are still in that iffy area, even though we barely peeked out of it. We still in that consolidated area. Okay, we still in that consolidated area. And then we just move it up just a little bit. Just a little bit, right about there. We still in this box, so there's no clear breakout yet. So if there's no clear breakout, what is this area right here called, guys? What is this area called? We call this area, this whole little yellow area. What was happening back here? What was price doing? Somebody tell me, what was price doing? Consolidating. It was going up and down, didn't know which way it wanted to go until it broke out of the box. You see, once it broke out of the box, what did it do? It broke out. Broke out. Then what did price do? It got to the bottom of the box, respected it, and turned around. But it's still not out of the box yet, so it's still consolidating. If everybody can see that price is consolidating in this area, just put a C in the chat for me. Okay. Until we have a clear breakout, it's not safe to place a bet. So that's why we have our pending order area up here. Because we know once it comes out of this box, it's going to the white line. So in order for it to get to the white line, it has to come through our area. It has to come through our pending order area. Same thing down here. If it decides to break down in the box or break out of the box, it has to come down to this area because now we know it's going to the white line. So we always wait for price to come out of consolidation, guys. We never trade in consolidation. Trading in consolidation means that you are chasing the trade. You are chasing the bag. You don't chase the trade. We position ourselves to catch it either here or here because we are waiting for the breakout. We are waiting for the breakout. Okay, so if everyone understands that we are waiting for the breakout moving up or breakout moving down, just put BO for breakout in the chat. Okay. You look for the breakout. So this requires a little patience. This requires a little discipline. And it requires you to be consistent with this. Okay. This is not a thing that's going to happen relatively quickly. Sometimes it can. Right? Sometimes it can break down very easily. And right here, for it to break down through this zone right here, that happened in a matter of an hour, 2 hours. It broke through the zone in 2 hours. Sometimes it could take longer to get back to this area. Right? So we have to have patience. So now let's set our pending orders. Let's set our pending order for our buy stop. So can someone tell me what will be our entry point for our buy stop in the chat? Can anybody tell me the entry? What will be our entry point? For the buy stop, Aaron? No. More like 1924, right? Let's just round it off, 1924. And we want to go 10 pips, so our entry point will be 1924. We put that in chat, entry. It's the buy stop. Go. Our entry would be 1924. All right. If we stick to our script, our model 10 pips and dip, what will be our take profit? Take profit would be 1925. Okay. And our stop loss, you want to do anywhere between 30 to 50 pip stop loss. Our stop loss will be 1921 to 1 to 1919, right? My math off? Yeah, 1919. The stop loss. Everybody got the buy stop. Everyone knows we're getting. Basically, we waiting here. You're using MetaTrader 4. MetaTrader 4, Trostland. MetaTrader 4. You do your charting on TradingView on your computer. You enter the trade on MetaTrader 4. Okay. Now we got our buy stop. Let's do our sell stop. No problem. Let's do our sell stop, guys. Our sell stop will be 1840. Will be our entry for our sell stop. Sell stop entry will be 1840. Take profit will be 1839. And our stop loss will be 30 pips. So that will be 40. So 1843 to 1845. Anywhere in there that you want to set that. Okay. Once you got the sell stop, guys, just put S for me for sell stop. So I know you guys got it. Okay. Okay. All right. So everybody got that. So Wednesday, tomorrow, guys, at 9:30, we'll have the intermediate zone. We're going to go further in depth on the strategy. We're going to talk about the moving averages. I usually talk about that in the intermediate traders Zoom. I don't like to talk about that in the beginners Zoom because it's a lot at one time to overwhelm you guys with. So Pat has recorded this. He's going to drop that in the group chat shortly after he